Control. I have Manisha Gupta with me, and as always, she's here to give us an update on what's happening in the commodity space. It's been buzzing and how, especially crude oil prices, right? 14-year high, the levels we last saw in 2008. What does this mean for economy, for consumers more specifically? How worried should we be?
I think we should be really worried because the kind of price rise that we have seen, Karunya, on 1st of December, we were trading at $70.
Yeah.
So in 3 months at $140 means we've doubled up on the prices here. The reason we saw this gap up opening today also was because we were reacting to what happened over the weekend. US has said that they are actively now looking at sanctioning Russia's oil and gas sector. Only countries who are yet to come on board for that are perhaps Germany, France, Italy, etc. If they are in agreement, then we perhaps are looking at that. So JP Morgan, Bank of America already have revised their upsides on crude prices. $185,
exactly.
$200 per barrel is what they're talking about. Yeah. So yes, it is scary from where we stand. And even if there is a ceasefire on war, but the sanctions will continue. And it is a concern. So we are looking at higher prices.
So there's no chance of the sanctions also being retreated if there's some kind of a agreement.
We've always seen in history that sanctions come faster, but they never ever go. And if they do go, then it takes a very long conversation, discussions and years of that. So it doesn't seem like that is happening. But as you mentioned, yes, there is going to be an economic impact. There is going to be an impact on customers, consumers, businesses, manufacturing, trading. And of course, because crude is part of everything that we do, right from the slide to the vegetables that we eat or travel that we do. So it is going to be impacting us in every way.
What about petrol prices? That's the biggest concern right now because there's a lot of chat in the social media that any time now there could be a 20-25 rupees hike.
Yes.
Is that true?
It is, because we have to adjust to the $30 per barrel of a jump up that we have seen in crude. But the interesting point here is, Karunya, that at 100 rupees per litre of petrol, we haven't seen a demand destruction. So the markets have taken that in. But will they be able to take a 110, 120 or a 130 of a jump up?
Do they have a choice?
Do they have a choice is one part of it. But I'm assuming the lower strata will start seeing the pinch of this and we will see some decline there. But yes, you can't do away with it. So the destruction, people are not calling it demand destruction, but we will see some decline in demand there. Perhaps a 3 to 4% of that, not so much, but it will start impacting all of us.
But like you said, crude is a very key ingredient for a lot of sectors, a lot of companies and products, etc. So are commodities and metals, and they are also on multi-year highs. So what really happens now to financial performance of these companies in the near term, because demand as it is was weak, raw material costs were already inflated, crude oil was already on the up move, and now they're hitting newer highs every day. So what happens to these companies, especially in the listed space, their financials, at least over the next 2-3 quarters?
When you look at January and February, let me take a step back and tell this to you. Jan and Feb, the kind of run-up that we've seen, the way we've started this year has been the strongest start to an year since 1915 when you look at commodities. Double-digit percentage gains for almost all of them. Well, yes, it's going to be a concern because we have under-invested, not just in crude, we are seeing that reaction, but the investment in many of these metals also has been lower because in last 10 years, you did not see this kind of a demand for metals. Now, because the conventional demand, the kind of stimulus, easy money that people had, the EVs, the renewables, that demand started coming in. So we were already looking at the metal prices running higher. So where we stand right now, you have aluminum at all-time highs, copper at all-time highs, zinc at 16-year highs, nickel at 14-year highs, palladium at all-time highs. I could just about go on. That's exactly what this space has done. It is going to impact the consumer in a very big way. So the renewable story may not go as you intended it to, but the producers clearly are smiling at you.
So who all stands to gain from this, and what kind of companies stand to be impacted by this?
So all the producer countries, so whether it was Coal India, which is producing coal, you have coal at all-time highs too. You have Vedanta, which is a natural resource company. So we've seen those kind of jump up there. JSW Steel, Hindalco, all the companies who have mines and are producing these metals clearly are in the green.
And of course, customers of these companies will be impacted badly.
Yeah, surely.
What about gold? 2,000 an ounce, that's a crazy level. When was the last time we saw these kind of, levels?
2020. So when you saw the pandemic hit, gold was the first one to react.
Right.
We saw $2,058 of an all-time high. And even with everything that's gone on, gold clearly hasn't been the metal of choice. We've seen safe haven in other things, other tangible commodities. Equities for the longest time was running so high that you did not see gold prices being so attractive. But yes, in last couple of weeks, that has completely changed. $2,000 of an ounce done, and we already have seen 2,058, 2,150. Markets are anticipating that 2,100, even 2,150 of an all-time highs, the gold prices will hit in this year itself.
So what is the street saying? Is it a good time still to buy gold if 2,100 is what people are eyeing?
Oh well, yes. If you are making a portfolio right now and you were diversifying that portfolio, then gold is your best bet. But if you also want to get in some bit of a trading there, then silver will continue to outperform. So when you look at this year, gold prices have gained up by 9%, silver is up by 15%, and that always happens. So this year as well, you will see silver prices continue to jump up quite high. In the Indian markets, we are trading at 70,000 rupees per kg for silver, and well, the guesses are out on how much higher it can go from there. The inflation part also is a worry because you have the food prices running up as well. You have wheat prices all-time highs, palm oil prices all-time highs, soybean, milk, something that everybody uses. So this is something that touches everybody. So inflation is a clear concern right now, and you should have some of that precious metals in your portfolio.
Everything other than the paycheck is at an all-time high.
Tell me about it. Yes.
But what's happening in cryptos? Because that's clearly, unraveled quite a bit, and all those people who were really reveling in the glories are now like quietly sitting in one corner and wondering what to do.
Yes. So I think crypto also is showing out what kind of an asset class it clearly is. So for the longest time it was about a new technology, it was about an influencer push, it was the kind of returns it was giving, but it's finding its ground now. So is it a safe haven? Clearly not.
Not, yeah.
It's absolutely moving like what equities have done.
Yeah.
It ran up with equities, it's come down with equities, but it has seen that kind of a sell-off. So well, yes, from almost $68,000 for Bitcoin, we're trading at around 38,000 right now. So it's half of what we were in the glory times. But well, there are some picks here as well. Bitcoin is something that people seem to be discounting right now. It is about Ethereum and Solana, which are doing much better in sense of performance than what Bitcoin is doing.
But there's also the 1st April timeline that everybody is watching out for. So is it ahead of that a lot of churn is happening?
It could be. It could be that, but it is also about what happens on 15th of March when the US Fed actually comes out with its policy. Is it going to be about 25 basis points? Because the market believes it cannot afford 50 basis points with the way the trend is. So that is something that we will watch out for. And then of course 31st of March, 1st of April, when we see those new tax regimes come into the Indian markets, how does that impact crypto? We will definitely see some profit taking ahead of that.
Booking,
Oh, absolutely.
Okay, I won't keep you for longer. I'm sure you're having a busy day, and I guess we'll have more of Manisha coming on Money Control for giving us updates on commodities. But that's all for now. Thank you guys for tuning in, and thank you for joining in.
You're welcome. Thank you. It's a pleasure.